This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC predicted robust fuel use in the summer months on Thursday and stuck to its forecast for relatively strong growth in global oil demand in 2024, highlighting an unusually large gap between predictions of oil demand strength. The OPEC, in a monthly report, said world oil demand will rise by 2.25 million barrels per day, BPD, in 2024 and by 1.85 million barrels of oil per day in 2025. Both forecasts were unchanged from last month. A boost to economic growth could give extra tailwind to oil prices, which have rallied above $90 a barrel this year on tighter supply and war in the Middle East.
The European Parliament voted on Thursday to pass rules allowing European governments to ban Russian liquefied natural gas, LNG, imports, by preventing Russian firms from booking gas infrastructure capacity. The European Union has avoided imposing sanctions on Russian gas, which some members rely heavily on. As a workaround, the new gas policy aims to establish a legal route for governments to block Russian gas deliveries to their country, though so far no major importer has indicated they will use it. The new EU gas market rules allow governments to temporarily stop Russian and Belarusian gas exporters from bidding for capacity on the infrastructure needed to deliver piped gas and LNG into Europe.
Moving on to the top news in the energy sector.
U.S. weekly imports of Mexican crude oil fell to the lowest on record in the early April, as Mexico's state energy company Pemex cut exports to supply more to its domestic refineries. The imports dropped to 209,000 barrels per day, BPD, in the week ended April 5. Data from the U.S. Energy Information Administration, EIA, showed on Wednesday. The imports averaged about 733,000 barrels of oil per day in 2023. The previous weekly low was 226,000 barrels of oil per day in the last week of 2021.
The Russian Defense Ministry said on Thursday it hit fuel and energy complex facilities in Ukraine with a massive, retaliatory strike using high-precision, long-range weapons from air and sea as well as drones overnight. The strikes were in response to Ukrainian efforts to damage Russia's oil and gas industry and energy facilities, the ministry said. As a result, the work of Ukrainian military industry enterprises was disrupted, the transfer of reserves to combat areas was thwarted, and the supply of fuel to the squads and military units of the armed forces of Ukraine was hampered, it said. Next, we have the top news in metal markets. More global copper smelters were not operating in March than in the first 2 months, data from satellite surveillance of metal processing plants showed. After Chinese smelters proposed to cut output and operations elsewhere undertook planned maintenance. Earth Eye, which specializes in observational data, tracks smelters representing up to 90% of global production for its Savon service and sells data to fund managers, traders and miners. The company said that an average of 17.7% of global copper smelter capacity monitored was inactive in March compared with 11.5% during January and February combined.
Iron ore futures prices drifted higher on Thursday as the latest soft data from top consumer China triggered renewed hopes of more stimulus in the second quarter to underpin its economy. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.29% higher at 826 yuan, $114.14, a metric ton. The benchmark May iron ore on the Singapore Exchange was up 1.12% at $107.90 a ton, as of 07:02 GMT. China's Consumer Price Index grew 0.1% in March from a year earlier, but fell 1.0% month-on-month, data from the National Bureau of Statistics showed.
We will now look at the top news in the agricultural sector.
India's palm oil imports in March plunged to their lowest level in 10 months as higher prices prompted refiners to substitute palm oil with SunOil, resulting in SunOil imports reaching the second highest on record, a leading trade body said. Lower palm oil purchases by India, the world's biggest importer of vegetable oils, could cap the rally in benchmark Malaysian palm oil futures that are trading near their highest in a year. Higher sunflower oil purchases will help to reduce sunflower oil inventories in the Black Sea region. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.